Our next guest for our Cash Tag segment, and that's going to be Andy Swan, co-founder at LikeFolio. Welcome back to the show, Andy.
Thank you.
All right, so we're talking Footlocker, we're talking athletic gear. The stock's had a nice run over the last 52 weeks, up about 34% at this point. It seems like the relationship with Nike is still intact, even though Nike said they're going to continue to move away from it. They've got a new CEO. What kind of data do you guys have out of LikeFolio on Footlocker?
Yeah, there's really nothing great to talk about with Footlocker other than the fact that the expectations bar has been, lowered basically to the floor, and it's tough for companies not to get over those sometimes. But when we look at Footlocker, we really see what I would call a complete struggle. When we look at it versus peers in terms of the number of people talking about shopping at Footlocker or dealing with Footlocker in any way. It's way behind all of the peers that we could find. So in terms of Dick's Sporting Goods, Nike only up 5%, but Dick's up 30%, Academy Sports up 44%, while Footlocker is down along with Hibbett Sports. We think Footlocker is underperforming versus peers, and that's in a really, really tough environment. Mall traffic down. We think around 11% on a year-over-year basis. That's a lot of how Footlocker generates its traffic. So overall, we think Footlocker's in a pretty tough spot. We think the market knows that. The biggest problem we have with Footlocker right now is that it definitely falls into the wants category versus the needs category from a consumer perspective. And what we've heard throughout this earnings season is that the wants side of the aisle is getting tossed aside, especially late in this first quarter, especially in the last few weeks of April, first couple weeks of May here. We're starting to see some real deterioration in the consumer. So we think that the company will have to come out, like so many others in the retail space, and say things don't look great for the rest of 2023. That's what we're banking on. That's what we think will happen. We've gotten paid a few times this season on retailers with this same type of pattern. We think it has a good chance of continuing with Footlocker.
Andy, this is a good discussion to have because Mary Dillon, the new CEO, Tom mentioned something that's kind of important here, which is she's making a real big effort to mend and improve the relationship with Nike. Doesn't mean Nike's going to change their overall game plan, but there's a chance that that Footlocker's not going to be in as big of trouble as we thought. There's other shoe brands, some of them that are getting pretty popular, as you know, and shoes in general, gym shoes in general, are more popular with millennials, young kids, than they've ever been. Like, I've never seen kids have more pairs of gym shoes, not one or two, but multiple pairs. So, she's had good success at Ulta. She's bringing that over here. Clearly, long-term, she has to transition away from Nike and reduce their relationship. But can't this company be saved using other brands and just the general popularity of gym shoes in general?
Yeah, I think, that optimism that you express, for what is clearly a very competent leader of this company, I think is what could get Footlocker through 2023. In fact, they've already come out and said 2023 is kind of a reset year. Not the type of thing you normally want to tell Wall Street, but once you've said it, it can give you a pass for a little while, which I think investors, Wall Street, and the company is kind of counting on here. I will reiterate what bothers us the most, though, about this is not the relationship with Nike, not the relationship with other shoe brands. It's the relationship with the consumer, and the consumer just really isn't that thrilled about going to Footlocker rather than just doing it online or doing it through some other means. And Footlocker's not winning that direct-to-consumer traffic either on the web. So I think overall, Footlocker has a long way to go. But the good news for shareholders is that it seems like Wall Street has already accepted that.
Yeah, you mentioned the move away from malls. Mary Dillon, the new CEO, she's bringing more focus on loyalty programs also, and expanding their e-commerce platform as, mall traffic kind of dies. They're trying to get away from that whole theme that they had before where they were in every mall, because malls are dying. We know that. But when you look at happiness levels, does that create anything positive, Andy? Because it seems like, these are discretionary items for the most part. And most times when people buying stuff at these stores, they're pretty happy with it. Is that what you're seeing on LikeFolio data?
Yeah, the time that they get upset, though, is when they don't have it, which goes to Kevin's point of the relationship with Nike. There's nothing worse than thinking the new Nikes have just dropped. You want to get a pair, you go all the way to the mall or to the store, and you get there and they don't have it because Nike has allocated too much direct to consumer, which I think is happening a lot. So I think Footlocker has a long way to go. We see their web traffic flat year over year. And then, in terms of just overall consumer enthusiasm for the company, we've really seen it drop over these last 3 to 5 weeks, much more than normal. Just like we saw with Home Depot, some others that we've brought you guys from a bearish standpoint, same type of story. It's going to be really tough for them to get on the call and be anything other than reset minded. I don't think there's going to be a lot of optimism about what's coming down the pipeline.
Andy, one last quick question. We're seeing e-commerce sales from a lot of the big box retailers down. Are you really seeing the weakness in malls? Because I get malls in some areas, there probably need to be less. But I'm telling you, malls in affluent communities are not down. They're surging right now. Are you seeing any mall data of significance?
Yeah, I'm with you. I think it's very bifurcated because overall we see it down, not huge, but fairly significantly year over year. But I do think we have to dig in deeper because I think there's pockets of extreme resilience. And I think that some of these more, luxury or higher end pockets are doing very, very well, where, a lot of the others, which include many of the malls that house Footlockers, are not.
Yep. All right, Andy, great stuff as always. Great data. A little bit bearish here on Footlocker into the results. Have a great day.
Thanks, you too.
All right.